Welcome. I'm Dan Rahill. I am a managing director with Wintrust Wealth Services and past chairman of the Illinois CPA Society. At the Illinois CPA Society, we put together a series of 8 short videos on the CARES Act, which is the third in a series of monumental COVID-19 relief packages, and this presentation is the fourth in our series covering individual tax provisions. So let's just jump right in to recovery rebates for individuals. Eligible individuals will be entitled to receive a refundable tax credit, a cash rebate, against their 2020 taxable income in the amount of $1,200 for individual single filers and $2,400 for joint filers, plus an additional $500 for qualifying child. The credit begins to phase out, however, at individuals' adjusted gross income of $75,000 for individual filers and $150,000 for joint filers. This means that joint filers will completely phase out at $198,000. Now, the cash payments will be automatically advanced to eligible individuals based on their most recent income tax filings, either 2018 if that's been filed or 2019 if it's been filed already. The Treasury and the IRS stated on April 1st that Social Security beneficiaries will also receive direct deposits based on their Social Security information if they have not filed an income tax return. Now, on April 10th, we received another update from the IRS and Treasury that people who have not filed tax returns because they have too little income will also be able to receive cash rebates. They need to go on irs.gov and look for non-filers, enter payment info here, and it'll direct them directly to the IRS's tool to receive their cash rebates. Let's talk about charitable contributions. There is now a $300 above-the-line deduction for charitable contributions for individuals who do not itemize. The one caveat on that is that the contribution must be made in cash. And then a further change in the law on charitable contributions is the fact that people who do itemize are not subject anymore to the 50% AGI limitation for the year 2020. That means they have unlimited ability to make charitable contributions this year. Now, to the extent they can't deduct those charitable contributions because they have exceeded taxable income, any excess is carried forward as a charitable contribution carry forward for the succeeding 5 years. But this rule change for charitable contributions and the 50% limitation for itemized filers does not apply to donor-advised funds or certain other organizations. Health savings accounts. A permanent change to the law with regard to health savings account and flexible spending arrangements now allows them to cover over-the-counter medicine as well as telehealth services. Again, these are permanent changes to the law. The Act mandates that testing for COVID-19 must also be covered by private health insurance without any sort of cost sharing involved. Let's talk about student loans for a minute. Payments are now suspended on federal student loans for a period of 6 months, and the government waives any interest on these loans for 6 months as well. These rules do not apply to private loans. Income tax exclusion for student loans. The Act provides a temporary income tax exclusion for individuals who get student loan repayment assistance from their employer. For example, if an employer contributes up to $5,250 annually towards a student loan payment program for their employees, that amount will be excluded from their income for the year 2020. In addition, this $5,250 cap also applies to new student loan repayment benefits for other education assistance, such as tuition fees, books provided by the employer under current law. Normally, these would be taxable income to the employee. Now they are not in the year 2020. With that, that concludes our individual tax aspects of the law. Stay tuned for corporate tax provisions in our series number 5. Thank you.